Good traders, how are you guys doing? Welcome to another class. This will also be a continuation of our previous class. Um, Today we are going to be talking about POI and quasi entry model. So, what is a POI and what is a quasi entry model? So, POI is simply point of interest. Okay, it's that particular zones where you want to enter from, those particular areas where you want to enter from, depending on your strategy. So a point of interest is a key price area where institutional traders, smart money traders are likely to initiate, that's to continue or reverse market move. Okay, so these zones are selected based on liquidity, order block, imbalance, market structure. So your POI could be order block, your POI could be fair value gap. Now, there are some traders that whenever, let's say, they have a break of structure like this, they use the breaker block. So your POI could be breaker block. I hope you understand. Okay, let's say in this phase now, my point of interest is this breaker block, and my second point of interest is this last extreme here. So this first place now will be my decisional POI. That's my decisional point of interest. I can say, okay, if markets come to this place, I'll just look for a confirmation like this to sell. If I do not see confirmation, I'll wait for my main decision, my main POI. So if price comes to my main POI, I don't need to look for confirmation. I could still look for confirmation. So this one becomes my decisional POI, and this one becomes my extreme POI. So a POI is just a particular area or zone where a smart money trader is focused on in order to continue a trend or reverse the market. I hope you understand. So there are traders who their POI are usually fair value gap. Let's say if they want to reverse a trend, they just look for a change of character and enter from the fair value gap. There are some that their own POI are usually the Quasimodo. They usually use Quasimodo. Some, their POI is usually the breaker block. Some is liquidity. They just mark the liquidity and enter from there because they know once the market sweep, it moves. Some is the order block. Some is supply and demand. Now, the difference between supply and demand and order block, they don't have much difference. They are like the same. But supply and demand is usually made up of, or let's say supply and demand is a particular area. Let's say now this market came down like this. Okay, let's just say the market is on a downtrend, gave you a break like this. Now, this whole area, you can call it a demand, this whole area. I can just come to this place, look for, let's say this is a 4-hour time frame, like I used to teach you guys. I saw a big candle here, the last one. I will just mark the whole of that candle and wait for price to come to this place. Then I'll start looking for change of character, maybe on 1 hour or 15 minutes. But if you are talking about order block, there might be multiple candles like this. Order block might just be this last candle here that the market created before the market made a very sharp move to the upside. So I know that, okay, if markets come like this, it will just fill all this gap and tap and start going. That is the difference between order block and supply and demand. Hope we grab. So let me show you guys example of what I mean by a POI. Okay, let's say for example now, look at this place. I have a break of structure here. This is a break of structure, and I now have another block here. This other block can be my point of interest. Even if the chart is at this point, let's say the chart haven't gotten to this place, I will just wait patiently. When the chart gets to this place, I look for my confirmation to reverse the market. That is a POI. Your POI can be this breaker block here. Why is it your POI? Because it is what you trade. Your POI might even be this other block here. Look at this place. We have another block here. This one. You just wait patiently. Once the market comes to your POI, that's why you see some traders will tell you that the market haven't gotten to my POI yet. They'll keep waiting until when the market gets to your POI, you enter. Okay, let me go to 1 hour time frame here to show us one more example before I go to QMR. Okay, look at this swing. Now I'm looking for buys. I have a break of structure like this. Now my POI, the first place I want to enter from is this breaker block here. The second place I want to enter from is where I have a Quasimodo here. I'll teach you guys about Quasimodo in the next few minutes. I have a Quasimodo here. And also, I also have this extreme POI here. I might choose to refine my Quasimodo to maybe the 50%. Half of this candle will be where? This place. Half of it will be here. Then, let's say the wick. I reduce the wick. Take out the wick. So if price gets to this place, since this is 1 hour, I can look for 15 minutes entry. Or if this is what I'm looking for, I'm just looking for a break to continue, I will enter immediately here. Now, if this market comes... Okay, go back. Okay, if this market comes to this place, and instead of going up like this, the market breaks this place, I'll now look for my extreme POI. Where is my extreme POI? This last order block here, or the whole of this demand here. I'll now look for, let's say I usually use order block, this and order block. I'll now use this one to continue buying. That is what a POI is. A POI is just simply point of interest. I hope you understand. It is just simply a point of interest. That is what a POI is. So the next thing we are going to talk about is QMR, the Quasimodo, or you can say quasi-entry model. What is a quasi-entry model? Let's talk about it now. Now, a quasi-entry model is a reversal pattern that ends a trend and starts a new one. It is a reversal pattern or an entry model or entry pattern that ends a trend and starts another one, giving us a particular place to enter from. So you can see in the definition here, it said a quasi-model pattern is a reversal pattern that marks the potential end of a trend and the start of a new one. It helps identify high probability reversal zone, and it's often used as point of interest, like order block, liquidity zone. Now this is what we call a Quasimodo. This structure here, let me take this one out. This one, yeah. Now first, let's say this market was initially on a downtrend. This market was initially on a downtrend like this. Now, when you have the last one here, let's say this is our 15-minute time frame. When you have the last one here, then you now had a pullback here. My highlights are here. This is the last one. You now have a pullback here, and this. Now, the market was not supposed to break this place since it's going down. The market broke it eventually. Now, then gave us a leg inducement. This is a leg inducement. This one, this pullback here is a leg inducement. Now, when the market gives us a inducement or an available liquidity for the market to sweep, now this last candle here is what is called, or what you mark as your Quasimodo. Now, your Quasimodo is this. It is actually a line here. Let me remove this so that I can mark it. It is actually the top of this last candle here. It's actually the top of this last candle here. But most of the time, on a lower time frame, the market don't usually come to this place. The market uses the full body candle. So this is what is called your Quasimodo. You can use a line if it's a higher time frame and just name this QMR. QMR. That's your Quasimodo. I hope you understand. Let me show you guys examples on the chart. So mostly this entry model is used for reversals. Okay, I've spot one here. Look at this swing. This is a lower high. This is what? A lower low. This is a lower high. This is another lower low. Now, we now have a break like this, right? We have a break. So the market broke this place. The market broke this place. So now, where is the last low that the market swept before changing character? This is the last low. Look at here. Just take your trend line. Look at this last place. Then you extend it to the right hand side. You can see how the market used it. So if it's on a lower time frame or still in the higher time frame, you can choose to use your rectangle to mark the last candle there, then extend it to the right hand side. Most of the time, the market uses this Quasimodo. This is called quasi entry modo. You see that after the first break here for this internal structure, the market tested it and went up, and then came back again, tested it again. So most of the time, where we have reversal, the market usually use this quasi entry model. Look at this whole swing. This is a high, a low, a break of structure, right? Then we had a change of character here. You can see it. We had a change of character. Now, where is the last candle here? The last high of the candle. That's you. If you are marking it, you mark from the body. This is it here. You mark here like this. You see, we are expecting the market to come back here. The market didn't come. But if you would have marked the full body, or you mark from the wick to where the body stopped, since the candle is big, you see that the market actually came there. So that is what quasi entry model is. It's just like a change of character. First, let's say if the market is changing from a downtrend to an uptrend, first you have a swing like this, a high, then a swing. This could be a wick or a full body, but there should be a liquidity sweep like this, then a change of character. Now, what makes it more valid is if you have a leg inducement here like this, then you can either use a trend line to draw the body of the last candle here like this, and this will be your entry. Or you can as well mark the full body using your rectangle. Mark the full body of the last candle there. That is what your Quasimodo. So let me look for a place where the market made a change of character, so that we can use that to practice it. Because here, go down to 1 hour. Okay. Now, look at this. Now, this market is already on an uptrend, on a downtrend. Sorry, I hope we know. You can see we already have a change of character here. We already have a change of character here. Now we know that the market is going down, but we need a confirmation to enter from this place. We want to enter from this breaker block here. If you look closely, you see a breaker block here. This a failed order block, right? We want to enter from this zone. So the market have come into the zone where we want to enter from. What do we do next? We look for a quasi entry model here. So we have this. We said either you see a break or a liquidity sweep. We have this, and then we have a change of character here. A change of character. Where is our quasi entry model? After the market made this high, made this low, then sweep it. The last candle here is this. You now mark from that candle straight. That will now be your entry. This is it. Where will your TP be? You target the low, or you target this low. This is already 1:4. You can still target here 1:3.6. That is it. And I'll still look for another example. So even when you are looking for a change of character, you can choose to enter from your Quasimodo. When you are looking for a change of character, you can still choose to enter from your Quasimodo. It's 15 minutes if I can. See a nice one. Okay, look at this place. Look at this place. This is a 15 minutes. Now I will consider week as break here because 15 minutes is my fractal structure. Okay, so look at what happened here. We had this break and we had another break here. Now where is my entry? My entry will be at the QMR, right? You can easily go to a line chart in order to spot it. If you go to a line chart here, this line chart signifies or shows only the body. Look at it. It shows only the body. Okay. The last candle here that the market, or the last swing that the market made before changing character like this is this. Right. So you mark just the body of that particular candle. Mark just the body. So there are times where you see like there are two Quasimodo there. You just mark just the last one. So this is our Quasimodo, this one, because it was the last swing that the market took out before changing character. This will simply be my liquidity. So markets retrace into this axis. Let's say this is my 1 hour structure. I had a break. The markets retrace into this place and I want to sell from here. I can simply look for a change of character on a 15 minutes time frame. So this is our 15 minutes now. I have a change of character. Now once the market have changed character, I will just mark my Quasimodo. So you can either mark it using a straight line like this, or you use a rectangle, especially on a lower time frame. The market usually just comes back to the body. It won't even get to the line. Okay, like this will be my entry. Very simple. So this is a confirmation entry model that you can use. I hope you understand. So target maybe this low, or you can decide to go lower than that. So that is just it. This is what a quasi entry model is called. Okay, you can find it in so many places. So many places. Look at this place. Okay, I'm looking for a sales here, a sell at this place. Alright. Now, this is my QMR, this last candle here. Why is it my QMR? That is broke structure here and broke to the downside. So this is now, I can simply be waiting for the market to come up to this place so that I can continue selling. So the market might come or might not come. Just learn that this is a Quasimodo. So that will be all about quasi entry model. It's a very, very important entry model. When you have your POI, so your POI could be maybe a 4-hour demand or a 4-hour supply level. When price comes to that place, let's say this is my 4-hour demand or supply level. All I will have to do is to wait for price to come here. Then I can go down to my 1 hour or 15 minutes to look for something like this, a high, a low, and a change like this. Where will my entry be? I'll not start looking for, okay, here, 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 here. I can easily take my rectangle, or if it's on a 1 hour time frame, then I can just use a line. But from 30 minutes downward, you just use a rectangle, mark the last candle here from the wick and the complete candle like this, and this will not be your entry. So it's more valid if you have a leg inducement here. Let's say if you ever look up, then an inducement, you just wait to enter from this place. Put your stop loss above here. You can target wheresoever you want to target. That is just it. So that will be all about Quasimodo. So in our next class, we'll backtest more about it and also look for more ways to enter, and also I'll still teach you guys on what to do and what not to do. Okay, but just know that a more valid uh, Quasimodo is the one that has a leg inducement, take out liquidity, break structure, then have a leg inducement. It's usually more valid. Okay, okay, this is supposed to be Q. Why is this not changing? Yeah, QMR, called Quasimodo. Yeah. So have a nice day, guys.